What's going on, everyone? I hope you're quite excited. Microsoft reported earnings in the after hours today. We're just now cracking into them. I know the initial reaction was rough to it, and not really unexpected for me, right? We're in a time in which I don't necessarily believe that earnings results have anything to do with the stock's performance in the after hour, really, the response to it. I really don't think that earnings is really going to put much of a play onto it. Just being honest, I think the market's its own beast right now, incredibly volatile. Within days, we're seeing 5% swings, just crazy. Every day seems wild. So was down 2.6 in the normal trading session, then after hours fell another 5% at one point, and actually has leveled up around 1.2% up, still below yesterday's closing. Again, we almost got to there, and then obviously stuff fell in the last hour of trading. The market fell yet again. Crazy to see. I don't know why I had my button or my finger on the stop record button. I don't know what's going on there. Forget about that. Scared for a second, almost messed up. Let's take a look at these earnings and see what this volatility is about. Again, I don't know if it's got to do with earnings. If you remember, you know what I predicted. I predicted an EPS beat, as well as a revenue line of $51.5 billion. Let's see what they're able to do here. Okay. Microsoft releases GAAP EPS, of $2.48. Yeah, that's a beat of 16 cents. Okay, big beat there. I love to see it. Now, revenue line, look, I've done the math for you. 51.7 billion. Pretty darn close, right? Am I right, folks? Up 20% year over year, beats by 910 million. That's a massive beat, close to $1 billion. We love to see a beat like that. It's incredible. So how do you see the stock go down again? It's got nothing to do with the earnings, why the stock was down in after-hour trading. Nothing to do with it. From the productivity and business process, business 15.9 billion. Intelligent cloud, obviously the most important part of the business right now for investors' sake, 18.3. More personal computing at 17.4. Actually a pretty impressive number. Let's look at the press release so we can see a little bit more of the fine details. This is something I think everyone needs to take a big look at. Net income line at $18.8 billion, an increase of 21%. They grew by similar percentages that they grew their revenue from. But to put up an $18.8 billion net income line with a revenue of $51 billion is absolutely incredible. We're talking about 18% of your revenue is, I don't know where the bad math came from. We're talking about 40% of your revenue, close to like 36, I guess. 36% of your revenue is net freaking income. If that's not printing money, I don't know what else is. That's a ridiculous net income line there. It's ridiculous. This company does it best. I mean, it really does. Net income line for tech companies. If you want to look at them, you look at Microsoft, you look at Facebook, you look at, I guess those two are really the best in terms of profitability that I can really list off the top of my head. They're just incredible. So, really incredible. Business highlights worth looking at. Productivity. Business up 19%, pretty well in line with what you might have expected there. The commercial and cloud services, 14% by Office 365. Commercial revenue growth of 19%. As I mentioned, it's massive stuff. LinkedIn revenue, which I'm very excited for the future of this company, because they're still working on monetization and how they can really bolster that into a revenue earner. 37% up. Really nice to see that. And the Dynamics product and the cloud service revenue increased 29%, driven by Dynamics 365, 45%, really nice. From the intelligent cloud standpoint, obviously the main point here is going to be the Microsoft Azure platform, 46% growth. They continue to grow by high double digits every single time. It's crazy. Now, the rates are slowing down, right? They used to be growing by 60+% every quarter. But you come to a time in which you've reached so many billions of dollars, even growing by the same dollar amount means a lesser percent, and that's kind of where you're at with Azure. It's still a fantastic growth. I don't know what freaking dummies don't like that line. I mean, you're insane if you think. I mean, percentages shouldn't really be the basis of everything. It should just be dollars. I mean, good grief. When you're growing by multiple billions of dollars, who cares if that's a 1% or whatever it might be? I mean, shoot. I personally don't care. Is growing by $1 billion at 1% better than growing, let's say $10 million in revenue, and that equivalent to 100%? I think I'd rather take the $1 billion. I'm taking the billion, okay? 10 million's got nothing on the billion. One company's established, the other's not. I mean, and I guess that theory's kind of fallen on its head right now with the current market status, so can't be too crazy here. Windows, or more personal computing, up 15%. Really like to see that. Windows OEM up 25. Commercial products up 13. Really nice to see that. Xbox up 10 off a really, really incredible year last year. So it's good to see continuous increase there. Search up 32, and service revenue of 8%. Nothing crazy for them, but we like to see it still. They returned $10.9 billion to shareholders in the form of repurchase and dividends in the second quarter. Good to see that. From an outlook, they will provide the guidance in the earnings conference call, which I haven't quite listened to yet, but we're going to get there. It's really nice to see. What else do we look at here? We're going to look at balance sheet, baby. And then we'll get a good picture of what this stock's looking like right now, if you're worth buying or not. So total current assets here, this line's right now, you get the difference of 6 months. Not my favorite. I like a full year comparison, but $174.1 billion, ridiculous amount of cash, compared to $184.4. So actually a decline there, a little bit of a decrease there. And you see it mostly in this accounts receivable line. Looks like they got that, and I'm guessing they paid off some debt with that, or maybe some share repurchase potentially. Total assets in general, though, yeah, that's an increase there. 340 compared to 333. Maybe they potentially capitalized and used some of that accounts receivable into this property and equipment line here. Grew quite a bit. $8 billion they grew there, so quite significant there. Total liabilities, total current liabilities sitting at 77.5. Again, I think that's where they use that accounts receivable. They paid off debt here, 88.6 prior. So that declined by 10, really $11 billion. Nice to see it. Total liabilities in general shrank quite a bit. The 11 billion there. Right now at 180 compared to 191. So they declined at $11 billion. And all the while, total assets grew by $7 billion. That's what I like to see. That's an $18 billion swing. I like to see it a lot. And you see it in the equity line. $160 billion of equity on this balance sheet compared to 141.9 of just 6 months ago. To grow $18 billion in equity in 6 months is absolutely incredible. And you see it really because that incredible net income line. This is the, in my opinion, premier balance sheet. They almost have as much equity as liabilities. I mean, that's ridiculous. How do they do it? I don't know. It's an incredible line. Satya Nadella is running a great company here. Now we look at valuation, and this is a stock that has seen really an unfortunate turn here since the end of December, down 15%. I think this stock is an absolute screaming buy. Some people might not agree. $2 trillion market cap, $2.1 trillion. It's mighty expensive, if we're being honest with each other. When you talk about a full year revenue line of, let's see if they posted on here. Last year, well, I guess they showed it here, $168 billion on their revenue line last year. Expected this year to be around $200 billion, I believe, actually. And that's not crazy. I mean, really, 10 times that value is not crazy. The P ratio, 32. is not that bad either. I don't hate the value here, and I know people are going to think that's crazy in the current market. I think there's a lot of room for Microsoft to still go down, and it just might. But I think this stock is still cheap when I'm looking at a 5 to 10 year horizon. I like Microsoft a lot, and especially you talk about the Activision Blizzard buyout. This will open up a whole new avenue for them when you talk about mobile gaming as well. And really the loyal Activision Blizzard customers, adding that to the Game Pass platform is going to be massive. Adding Activision Blizzard games onto there. They're just really trying to bolster that subscription service, and that's going to offer them a lot of money. That's repetitive. So I like Microsoft stock at these levels. I know it's expensive, especially compared to the rest of the market right now what it's been going through. It's still a premier company, and this company's going nowhere over the next 10 years besides up. Okay.